So my name is Muhammed. I'm living in Dubai, as you can see from my outfit, and I don't know what Brussels summers look like. So I came to Brussels to speak here for a day, and my thought was, let me check the weather app, and it looked like summer. When I woke up this morning, it was raining. Anyway, thank you very much for having me. I'm the CIO of NOIA Capital. We're one of the sponsors of the conference. I want to give you guys, to start with, my own journey into this, basically, because I think for everyone in this group and everyone in this ecosystem, it's a personal journey as much as it's a top-down approach to investing or to technology, etc. Me personally, my background is 15 years of financial markets. I've been in the hedge fund world, mostly in London. And during that time, one of the guys that I had hired for one of our new offices, he went off and joined a company in the blockchain space. 2 years fast forward, from 2013 to 2015, we met again in London. And when we met, he told me about Bitcoin. And he told me that it's similar to Romain, that it's going to revolutionize the world, basically. And I was interested because it was new. And as a portfolio manager, I was always looking at things that might disrupt in the companies that I'm investing in. When you're long certain assets, you always want to know what is it out there that could basically affect your own investments that you have in the portfolio. Long story short, I did something which I see now in the space very little people do. I actually just didn't read anything. I thought I'll just try it out, basically. So what I did is I bought a bit of Bitcoin, I sold a bit of Bitcoin, so then I realized, okay, it's actually working, you can buy and sell it, basically. And but still I didn't understand what the use case for this was, basically. And I think right now, given where the price is and where the ecosystem is, a lot of people are doing soul searching. A lot of people are saying like, okay, but is this the right thing? What am I doing in here, etc. And I encourage everyone to try it out. So what I did is, on a Sunday, late 2015, I took $180,000 worth of Bitcoin. I was living in London, and I sent it to a friend in Turkey. So I asked him to download the wallet. He was in Istanbul, and I sent him the Bitcoins. He forwarded the same Bitcoins to Dubai. From Dubai, we went to Tehran, to Iran. A friend of ours was working with one of the rocket internet subsidiaries, which was the Amazon of Tehran or of Iran. And from there, it went to Japan. From Japan, it went to my brother in Frankfurt, which made me very happy because the money arrived back safely into family hands. And then my brother sent it back to me to London, basically. On a Sunday, within 6, 7, 8 hours, we transferred $180,000 at a total cost back then of around $20, $25, $30 around the globe, touching Iran, going all the way to a different time zone of Japan, and coming back to London. Fast forward 2016 to 2022, that's 6 years. That same exercise, I have other businesses that I'm as an investor. That same exercise for anyone that's doing cross-border business, that still takes 2 weeks, basically. And if it touches Iran, it doesn't never arrive back, basically, because it just doesn't go there, right? So the world, so for me, to the current state of things, already back then, I immediately realized this is a 1000x improvement to what I currently have as an alternative. So for me, the use case was very clear. For me, the use case was, okay, if I want to trade and I want to do business, and I don't want to deal with currency exchanges and capital controls and abilities to, can that guy settle in my currency? Can I trade this, that, the other? I can just use the internet's currency. So in my mind, it was like, okay, this is going to become the internet's currency, because the more the world becomes a village, the more you will be required to have a unified system, basically. I think one aspect, which is what we are still doing and we will be continuing to do, which Romain didn't touch on, is the aspect of seigniorage, right? I don't know how many of you guys know this word. I'm sure many do. But basically, the money's monopoly is in the hands of governments, basically. And why is that? It's very, very simple when you think about what is seigniorage. Seigniorage is, if I take, and again, I'm not from Brussels, so I'm going to take a dirham note. If I take a 500 dirham note, I might have 5 euros, but if I take a 500 dirham note, then yeah. And the cost of printing this is 5 cents, maybe, right? But that's a 120 euro note, basically, right? So that's seigniorage, the difference between the cost of printing a currency and the value of that currency for the people of the country, basically, right? The governments have that power. That power, you don't want to give that away. And I don't think us, as being people in the space, etc., we shouldn't, necessarily claim that power, because that's anarchy, basically, for people to say, like, I want that power, basically. Much more importantly is, if I can send this type of money around globally, then it means I have a savings bank in cyberspace. It's like my bank account, right? It's like my savings account. I can access it wherever I am. I can travel with it wherever I am. And that then comes up with all other socio-economic, geopolitical benefits of being in the space and in a decentralized, trustless monetary system, if you think of it that way. I don't know if anyone here has friends or family in Eastern Europe, especially in Ukraine or Russia. I mean, Dubai has taken a very neutral stance, so we see a lot of inflows of people basically coming. It's very clear. I mean, it's very, very clear. People have left cities over the last months in thousands, in millions, basically, and the only thing they could take with them is a bit of cash to survive on the road, and basically, if they have and the understanding, change some of their assets that they could liquidate into crypto and move with that, basically. Because you can't take your house, most probably can't take your car, because you can't cross the border with your car in some of the cases. So it's extremely difficult. And in this current world, we don't think of these things. I'm born in Germany. Most of us probably are based and born here. We don't know these risks, basically. We've never come across these situations, right? So I just wanted to give you that and start with that personal journey of mine, because I think that's what basically will hold this community and this idea together. And that's where the trend is. That's the underlying trend. Now, how that trend will evolve itself and manifest itself, we will all watch together. No one is my name is Muhammed, it's not Prophet Muhammad, right? So I can't see the future. So if you can go, oh yeah, it's here. So my presentation today is it a fad or an emerging asset class, right? I mean, that's what everyone is now back asking themselves after a 60-70% drawdown. I already mentioned, in my example, the hyper-connected world. The only thing I want to point out here is, as you can see, this presentation is maybe a week or two old, and the asset class was double the size, so it's 1.8 trillion, right? Just gives you an idea of the volatility. At least what goes for me is, like, I'm not asking people to put 99% of their wealth in it. I'm just saying, have a look at this asset class and don't just write it off, basically. But really, we are at the dawn of a paradigm shift. We are there. That's very clear. And I think Romain made a very good case for that. The world needs increased trust. You have all the fake news, which Trump basically came up and made it very clear to people that they shouldn't believe everything they see on the internet, etc. And you have a stronger and stronger need for security and wealth preservation. This is very clear. The world is going into a more and more volatile world, especially of the trends that we are seeing, which are part deglobalization and territorialism, basically, right? So, everyone is interested to basically own the next best store of value, because central banks are devaluing currencies. I don't want to go into this. I think you guys know this. Romain made the case. It's very clear, basically. So if you can find something that is decentralized, where the monetary supply of it is set and can't be changed, it's completely normal for it to get interest, basically, for people to say, like, I'm interested in this. Why for 5,000 years people were interested in gold? I mean, everyone always thinks, oh yeah, it was the ladies that wanted to have it as a jewelry and then kind of dragged all the guys into it as well. it's not that. The whole point of gold is that everyone that is born, the minute it becomes a judgmental human being, knows that it's a scarce asset. And you can't burn it, you can't melt it, you can't get rid of it. It has physical properties that make it extremely durable in any condition almost. So therefore, it's not gonna rot away, basically, and therefore you can store value in it, basically, right? You now, given technology, have the same ability in a better way with Bitcoin, basically, or with digital assets, right? But mostly with Bitcoin. And therefore, that's basically the whole summary. You don't need any other. Once you understand that, then you know why people are interested in this industry, basically, right? So we already mentioned the protection against conflicts, etc. And at the same time, that's the beauty of it. While I realizing that this is a scarce, absolute scarce monetary asset, and you can invest in it wherever you are, and you can access it wherever you are, the beauty about it is that at the same time, you're basically buying an inbuilt call option for the application of a high-tech growth sector, basically, right? Because it's the underlying fundamental infrastructure for basically new tech businesses to evolve from it. So it's kind of a double bet, basically, if that makes sense, right? Now, we're not the only ones that have realized that. A lot of people, rightfully so, will say, yeah, like me in 2015, I saw it, but I was like, yeah, but I'm not the smartest guy on the planet, so who else is doing it? Back then, there was barely anyone that had a brand name to it that was involved. Fast forward again 6 years, most of these names are known to everyone here. They have all either adopted Bitcoin, either are working on blockchain technology applications, or have actually added Bitcoin to their balance sheets already, right? A bit like Christoph, who has added Bitcoin to his personal balance sheet, basically, right? By getting his salary as a politician in Bitcoin, right? So we're already here. The left side for you guys is the corporates. The right side are the investment management companies. Some of the biggest and best players on the planet, basically, that are already in it. And these institutions don't make decisions lightly. They have very serious boards. They have long decision-making processes. So obviously, if they have decided to adopt this, maybe there is something to it. What I want to show is that this technological evolution has two aspects. One is the monetary disruption, and then the other one is the technological disruption, basically, that it brings, right? So how does Bitcoin actually challenge our monetary status quo? How does it do that? Bitcoin, that's the size. We are now around half of that, right? So we are like at 0.4 now, 0.3, 0.4 now because of the price. But those are the different sizes of the different asset classes. So collectible art is around $1.5 trillion. It's always difficult, one of the most difficult to measure because it's subjective, extremely subjective. The hedge fund market, my background, that's a 3.8 trillion asset class right now. Very, very much close towards retail, only accessible to high net worth individuals and institutions. 11 trillion are said to be in offshore accounts, etc. Gold is at 13 trillion. By the way, the jewelry aspect of gold is actually around $1 trillion. So 12 trillion out of this market is the monetary aspect of gold, basically. Sorry? Right, that's right, right? So the monetary value of it, she said it's there with the central banks. So the monetary aspect of it is the vast majority in this asset class. I'm only giving that as an example because gold in the investment world is also slammed upon and challenged with saying it doesn't produce any yield, it has no benefit, why is it worth anything? There is a big divergence of views, basically, of people that are bullish and bearish gold. Then you have equities, probably also down now, but in the teens of trillions. And then you have global bonds, which is even larger, and the global real estate market, right? So if you think of that, where Bitcoin is versus some of these asset classes, we've done this number here, you can see it's basically nothing, right? So it's still valued as a call option, basically, right? In terms of its size versus what it can eat, basically, eat into, right? At a minimum, it has all the characteristics of gold. The only problem that gold has, it's extremely difficult to transport gold physically, right? So gold, we say, gold doesn't move in space. It moves in time because gold has a very non-corrosive attribute, so it doesn't rot, as I said, it doesn't get old, blah, blah, blah. So it travels very well in time, but it doesn't travel well in space. It's extremely difficult to transport gold securely from A to B. Bitcoin solves that problem of gold. It has the ability, so your one Bitcoin is your one Bitcoin in 10 years from now. So it travels very well in time as well. As long as there's two computers connected to each other, there's always going to be Bitcoin. You can do whatever you want. There's always going to be Bitcoin. And there's always going to be a value alongside Bitcoin, because the difficulty adjustment of the protocol makes sure that the value of Bitcoin is always non-zero. So if you're thinking it's going to go to zero, I have bad news for you. It's wrong. It can never mathematically go to zero, basically, right? So it can be at 0.1, 0.05, or 10,000 or 200,000, but it can't go to zero, basically. But it travels very well in time, like gold does, but actually it travels very well in space as well, because it's digital. That's why, if you're fleeing Ukraine today, you can't take all your gold bars. If you have $10,000, you can hide it under your jacket, which is probably, one bar, basically, right? It's $50,000. If you have a bit more, it gets a bit difficult, and it gets exponentially more difficult the more money you have, basically, right? So gold, that use case is directly challenged with it, and in that case, we're talking about a 50x, basically, right? Now let's look at the adoption of it. This is the white one, and it's not very clear, I think, but basically the white one is the internet users from 1992 to 2006. So when internet started, and it shows you the growth rate, the total users, and basically the years here. So if you look at it, internet users in 1996 were below 10 million, around 6-7 million. And basically, within the first 10 years, I think that is, we went to above whatever that is, 300-400 million users, right? Right now, the comparison of that for crypto, if you look at that, that's where we are. So if we're going to this point by 2024, 2025 now maybe, you will be crossing 1 billion users, basically. Because the space is around 200-300 million people right now, right? And we probably lost 20 million in the last 2 months, basically, right? So from that perspective, you need to also understand, all of us, we need to always, we do this all the time, we need to do this cross-check of saying like, okay, where are we? Are we now 80% penetration? Are we 10% penetration, right? If Jeff Bezos would have given up saying like, oh yeah, now I have a 100 billion market cap already, if you have not done that cross-check, realizing that he is less than 5% of retail, basically, total retail in the US, you would have made a big mistake, basically, right? This is the same here. You can see it on the top, yeah, now I know it here, 1992 to 2000, so it was the first 8 years. This is another chart to see how early or how late we are. This is the adoption curve of all sorts of technologies since the 1900s, from the telephone to air travel, to HDTV, to social media, to smartphones, to tablets, to cameras, etc. There is one thing I think that is very clear to all of you guys, that the curves become steeper, obviously, right? Because adoption becomes faster, because information travels faster, right? So therefore, things get adopted faster. The curves become steeper, but more importantly also, again, where are we in the adoption rates? Look at the steepness of the curve. Like I always say that, if I would go back and try to explain to someone, how were you communicating, 2008, pre-WhatsApp, basically, right? People don't even forget now that this is, less than, 10, 12 years in our lives, basically, right? So it's another example to show us and remind ourselves of where we are in this long-term adoption curve, basically. And the beauty in terms of for Bitcoin is that incremental adoption with a supply curve that is set, that continues to halve. So for the ones that don't know, there's 21 million Bitcoins. There's never going to be more. That's how the protocol is set. We started with 50 Bitcoins to issue. Every 210,000 blocks, we halve. So the protocol halves. We're now at 6.25. By 2024, we will halve again. It'll be 3.125. 2028, it'll be 1.6, blah, 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 blah. And then, 2032, it'll be 0.8. It'll halve. It continues to halve, basically. So the supply is set, and it continues to halve. So if you think of it this way, while the adoption drivers exponentially increase, so to say, because more people get into it, and they have and they have other ideas, and therefore, every person tells 5 people who tell 5 people, and everyone wants to be interested to look at different aspects of it, work in different applications of it. So while the use cases exponentially increase, think of DeFi, think of NFTs. They were not here in the last cycle. I never had heard of anyone buying JPEGs with crypto until Raul told me at NOIA that people do that, basically, right? So, that's with a set supply curve should allow the price over the long term basically eat into that digital gold theory, basically, right? And I want to just finish with this, basically, because of the time that I have. Ray Dalio is, in my space, the most famous hedge fund manager on the planet. He runs $160 billion Bridgewater Associates, and he's a very good man, and he's now spent the last 5 years, approximately now, of his life to educate people. So he came up with all these YouTube videos and books explaining, and they're called How the Economic Machine Works, basically. So he tells you, and he tries to explain people, normal people, of how the economy works, and that they should be aware of debt cycles and long-term cycles, etc. And he wrote plentifully about it. And this is one chart from his book, where he basically looks at 250-year kind of empire cycles, so to say, which are laid over 80-year debt cycles. And there, he says, there was the Dutch Empire, which you guys know very well as your neighbors, right? So there was the Dutch Empire, which then basically got replaced by the British Empire, which itself got replaced by the US, basically, right now. And he is saying in his book, now we're going into a duopolistic world, basically, again, and is it going to get replaced by the Chinese Empire? That's what he basically asks in his book, or makes the case in his book, right? And the way he looks at that is, he says it's the reserve currency status, basically, right? So once these empires become very large, they become reserve currency of the globe. When you are the reserve currency of the globe, that seigniorage premium goes through the roof, because everyone wants your currency, and you can just print it and give it to them, and that difference you make, right? The 5 cents versus the 500 dirhams difference, you make that, basically, as a government, right? So everyone wants to be reserve currency status, exactly like every company wants to be a monopoly, basically, right? So he makes that case that China might be the next challenger of reserve currency status. We at NOIA, we looked at this and we were discussing this, and basically our logic and the conclusion we came to, we were like, okay, this doesn't make sense, because you don't achieve reserve currency status because you're big. You achieve it with rule of law, with fairness, with an open system, with allowing people to want to be in your ecosystem. That's how you achieve reserve currency status, basically. The United States is a reserve currency status because all of us, we know when we buy an asset in the US, there is a legal system that protects our assets, basically, right? So that's why that has a reserve currency status. And that then allows for a military might, basically, to come after that. But the question we had, to Romain's point, and where technology is the world not actually at a point where all of us as humans, we don't want to be, replacing the current system where we're already thinking whether democracy works in a way, that we want it to work for us, by replacing it with another economy now, because there are 1.5 billion people, and now we are supposed to adopt their currency. I see it very difficult. When I look out 20 years from now, I'm certainly not holding renminbi. I see it very difficult when all my Chinese friends are not holding their own currency, or not willing to hold their own currency. For Ray Dalio to be right, and for that to become reserve currency, because of the size and the economic output of the country, basically, right? So therefore, our bet is that the next reserve currency, if there is going to be one to be replaced with the current system, would be a decentralized monetary system where people are saying, I don't need to bet on a single country, on a single leader, on a single individual, on a single political system. I don't need to do that. I just know that the one I bet on is never going to change, basically. And it's decentralized and no one can change the rules. And therefore, we believe it might look a bit like that, maybe. Maybe you have Bitcoin basically taking over as the next reserve currency. And there, the beauty is you don't have any of these cycles because it's not controlled by anyone. So it's not the point that, when it's set and it's decentralized, that people would want to challenge it in a way they would want to challenge governments. I really thank you guys for your attention, and my time is up, but basically those were all the words I wanted to say today. Thank you so much.